When it comes to funding startups, investors face a landscape filled with both potential and uncertainty. The allure of high returns is undeniable. After all, some of the world's most valuable companies began as small startups seeking their first investment. Yet, for every success story, there are numerous ventures that never quite reach their potential. Understanding what to look for, where to look, and which factors are most predictive of success can make all the difference for investors aiming to maximize their returns. The first cornerstone for funding any startup is the strength of its business model. A robust business model doesn't just describe how a company plans to make money. It also outlines scalability, sustainability, and adaptability. Investors should examine whether the startup has identified a real market need, developed a viable product or service, and built a clear path to revenue. Scalability is key. A startup must be able to grow without a corresponding spike in costs. This is one reason technology-driven startups, especially those in software or digital platforms, often attract significant investor interest. Their marginal costs remain low as they expand, allowing for rapid growth and higher potential returns. Equally vital is the management team behind the startup. The best ideas can falter without the right leadership. Investors should look for founders and executives with a strong track record, industry expertise, and, perhaps most importantly, adaptability. Startups operate in fast-changing environments, and the ability to pivot, adjusting the business in response to feedback or market shifts, can be the difference between success and failure. A team that demonstrates resilience and a willingness to learn is a strong indicator of a startup's potential for long-term growth. Understanding the competitive landscape and market potential is another critical consideration. Investors must assess the startup's position relative to existing competitors and the overall size of the market opportunity. Is the startup addressing a niche audience, or does it have the potential to capture a significant share of a large expanding market? Market timing also plays a role. Entering too early or too late can hinder even the most promising ventures. Financial health cannot be overlooked. Investors should scrutinize a startup's cash flow, burn rate, and plans for debt repayment. Is the company managing its resources effectively? Is it on a path to profitability, or is it overly reliant on continued fundraising? Startups with clear financial plans and prudent management of funds are more likely to weather the inevitable ups and downs of growth. Legal and regulatory compliance is increasingly important, especially as data privacy laws and industry-specific regulations continue to evolve. Startups that proactively address these concerns not only reduce their risk of legal challenges, but also signal professionalism and foresight to potential investors. Compliance builds trust and enhances investor confidence, paving the way for more sustainable growth. On a global scale, certain regions have consistently demonstrated higher returns on startup investments. The San Francisco Bay Area stands out as the undisputed leader, having created 377 unicorns, private startups valued at over $1 billion since 2019. This region's unique ecosystem, characterized by a dense concentration of world-class universities, venture capital firms, and a culture of innovation, makes it fertile ground for high-growth startups. On a per capita basis, the Bay Area boasts an impressive 48.6 unicorns per million people. New York City follows as another global hotspot, with 179 unicorns created in the same period. The city's diverse economy, access to capital, and vibrant entrepreneurial culture contribute to its strong performance. Tel Aviv, often regarded as the technology capital of the Middle East, has produced 83 unicorns since 2019 and ranks second globally on a per capita basis with 21.3 unicorns per million people. The city's emphasis on cybersecurity, artificial intelligence, and fintech has made it a magnet for investors seeking high returns. Other regions are emerging as significant players. The Middle East and North Africa, MENA region is experiencing rapid growth in its startup ecosystem. In the first half of 2019 alone, the region saw 238 investment deals totaling $471 million, a remarkable 66% increase over the previous year. This growth is driven by an expanding pool of entrepreneurial talent, increased access to funding, and governmental initiatives aimed at diversifying economies beyond traditional industries. Africa, too, is capturing the attention of global investors. A recent analysis of over 2,500 startup investment deals from January 2019 to March 2023 highlights the importance of human capital, sector diversification, and cross-border collaboration for building robust startup ecosystems. The continent's youthful population and rapid adoption of mobile technology have spurred innovation in sectors such as fintech, agritech, and health tech. Countries like Nigeria, Kenya, and South Africa are leading the charge, attracting both local and international investment. With these global insights in mind, which specific startups are showing the most promise for high returns on investment? While technology remains the dominant sector, certain areas stand out. Fintech startups, those focused on disrupting traditional banking and financial services, are flourishing across multiple regions, from Silicon Valley to Lagos. Health tech and biotech startups are also in the spotlight, especially following the global pandemic, as investors recognize the importance of innovation in healthcare delivery and diagnostics. Clean energy and sustainability-focused startups are gaining ground as well, driven by both consumer demand and regulatory pressures to address climate change. Investors should also keep an eye on startups leveraging artificial intelligence, machine learning, and cybersecurity. These technologies are not only reshaping industries, but also creating entirely new markets. Startups operating in these spaces often attract premium valuations and have the potential for exponential growth as their solutions become integral to the digital economy. Of course, no investment is without risk, and due diligence is paramount. To stay ahead of trends and gain access to legitimate, up-to-date information on investment opportunities, subscribing to reputable sources is essential. The Abundant Life series stands out as a trusted resource for comprehensive analyses and updates on global investment trends and business insights. Subscribers benefit from expert perspectives that help demystify the complexities of startup investing, keeping them informed and empowered to make smarter decisions. In a world where the pace of change shows no signs of slowing, staying informed is key to maximizing returns and minimizing risks. Whether you're a seasoned investor or just beginning your journey, leveraging credible information and learning from global best practices can make all the difference. Don't miss out on the insights that can shape your financial future. Consider subscribing to the Abundant Life series for the latest and most reliable guidance on investments and business trends.